Hello and welcome to another edition of Real Talk. Well, it's very interesting times. We've got a very bullish worldwide market at the moment. Nearly all markets are up about 1.5%. It seems that when Trump announces tax cuts in the US, that all markets become very, very buoyant. And I was discussing this with Nick Stratus this morning, and I said, are we really that connected to the US? I mean, Russia is connected to the US as we are. And I think we really concluded it just remains the fact that the disposable dollar for the US, and there's such a great big market, that they do have a lot of pull strings around the world. So yes, right now, whatever happens in the US is ricocheting worldwide. But locally, great news. Our commodities continue to become stronger. Iron ore is at a real high in comparison to recent times. And I don't know if those of you who are listening to the ABC this week about, the combustible fuels such as the highly combustible coal, which is actually still growing in value, versus the clean fuels such as the wind and ocean. So there's still this ongoing debate about what is the cleanest type of energy, and of course people are finding it so hard to let go of coal because it is just so combustible. So I think we'll see a lot of changes in that space, which has been ongoing for a while, and yet the good news for us at home is that energy largely is costing us less money now than ever before, which is fantastic. The property market, well, it's still alive and well. We had over 75% clearance rate over the weekend, although only about 617 properties went to market. Probably a little bit low for that weekend. Normally, the second weekend back in February is one of the biggest weeks, but I would suggest the next few weekends in a row we'll see a real dynamic, some real dynamic movement with some great results. There is a very interesting shift at the moment in the investor market, because those people that are choosing to invest in houses are having to put their hands up with the mums and dads that are wanting to buy their second home, upsizing, downsizing. So they're really under enormous pressure, spending big dollars on the investments. The townhouse market is still very, very buoyant. The townhouse market tracks between the apartment market and the house market, and it's moving as swiftly, literally on the skirt tails of the home market. And the apartment market is very much under fire at the moment, being seen as the country cousin of the performance and the asset class. But here's the interesting thing. Apartments are performing better on a rent return than any other asset class at the moment. Now, so there's a lot of people very despondent because their apartment sales have stalled. And in fact, I've got 2 emails this week from clients who are saying, here's an apartment in the same block as mine, and it's cheaper than what I paid for mine. But when we've looked at them, in every case, they've been an inferior, smaller, at the rear, looking into somebody else's kitchen, and our clients are buying beautiful corner, up high, unencumbered views, etc. So you've really got to look at what your true intrinsic value of your asset is, and don't panic just because it's in the same block. It could actually be size of a matchbox in comparison to your larger property. But I think the material point is that we've had 10,000 new investor rental properties going to the market last year, and yet there's a shortage of rental properties. So that continues to build the case that more people are renting in Melbourne than are buying. And it's a whole lot of reasons. The real reason is they can't afford to buy. So we've got this absolute gap where the houses are outpriced for the investor market. If an investor's buying into an apartment and they do want to opt out of their investment, the best person to sell that to is another investor. The reason that's working so well is the rent returns are so high. So I just say to everybody, there will always be ups and downs in the investor market. I bought BHP at an all-time high, and my BHP went under $20. Who'd have thought? But now I'm watching it climb back out. By the time we're announcing we've got an oversupply in a certain sector, I can tell you, by the time they're announcing a recession, you're halfway through it. It's just a matter of a little bit more time for this to come out. Rents are the highest they've been since before the GFC. Don't just look at one aspect of your investment. Ultimately, we want three. We want capital growth, we want rent return, and we want it to dovetail beautifully into our tax and work well for us on the home front. Rents are charging ahead. Prices have stalled. It will change. It's just a matter of the tipping point, and I think it's really soon. In fact, CoreLogic data and quite a few research houses are coming out now saying that the oversupply they were touting last year was actually not as bad as they thought. Hang tough, hang in there. It's all going to turn. Take care and have a great day.